And joining me now is Thomas Hayes. Thomas is chair and managing member at Great Hill Capital. Thomas, welcome back. Great to have you here as always.
Thanks for having me, JD.
Let's start with your takeaways. A top line and core CPI reading, both a bit cooler than expected, maybe helping to set the stage for investors today. We're in positive territory, not by very much, but what'd you make of the numbers?
I think it's a big deal because as of yesterday, you saw the odds of a Fed cut in June go up over 90%. With inflation coming down, this gives the Fed the opportunity to be back in the picture. And if you remember, just a few weeks ago, people were saying no cuts in 2025. But what they were missing was the fact that seasonally, January and February inflation numbers are hot. It's a seasonal factor. We're now coming off the boil. Inflation's coming down. It brings the Fed back into play.
What is something about the overall markets you wish people were paying a little bit more attention to, or maybe something we're not discussing quite enough?
I think, number one, the big correction in Mag 7 was not attributable to tariffs because most are unaffected by tariffs. It was actually the carry trade unwind. If you saw the 10-year JGB yield shot up from effectively 0 to 157 in a very short period of time. When you're borrowing the funding currency and it has no cost, that's good. You can crowd into Mag 7. When that cost starts to go up, as we saw in recent weeks, people have to unwind that leverage because there's a cost of carry. So what have you seen in the last 2 days? Those 10-year JGB yields have backed up off the boil from 157 back down to 150 range. The markets are steady, things are calm. Mag 7 ready for a big technical bounce here, but I don't think the theme for 2025 has changed, which is Mag 7 underperform. They'll do fine, okay, maybe trade in a range, maybe back to the top of this range, so we'll get a good technical bounce here, but real huge opportunity, unmagnificent 493, those boring companies, and international, which we've already seen take off like a rocket this year.
What are your expectations for PPI inflation data out tomorrow, and what does the Fed do with both this CPI print and tomorrow's print into next week's meeting?
Yeah, PPI tends to be the leading indicator. They've been a little better than CPI, even in the seasonally strong period, so I would expect it to be subdued like we saw today. That's a very constructive thing. That can bring the Fed back into play if we have further volatility. They can start saying, like, we stand ready to act. Right now, we're going to wait, be data dependent, as they always say, whereas before they're kind of like effectively alluding to the fact that they were done and kind of calm and patient. Now that they can say, well, we're paying attention, we can be in play, and that's what the Fed funds futures are reflecting.
I got about a minute. Let me ask you about a few of these names I know you cover closely. Let's start with Alibaba, up over 60% for the most part, knocking the cover off the ball, recently unveiling a new AI model. What are you tracking there?
This is an absolute home run. We've been building this position for 2 years, okay? So we started buying in the hundreds, we backed up the truck in the 60s. It's at basis 83. It's absolutely taken off. It is just getting started. Do you buy it up after 60%? Wait for a pullback. You might get a little bit of weakness to buy it, but as far as some of the parts' intrinsic value, we're just getting started. This is going to be a multi-year theme. Their stimulus is kicking in. They've basically done a 180 on their policy, and Alibaba is best positioned as an AI play in China.
Let's close with PayPal, struggling a bit, not quite down to its 52-week lows, but it is trading below the 200-day moving average. What do you see with PayPal?
Bet on the jockey. Alex Chris is a winner. He came from Intuit. He ran 50% of revenues. That thing was a multi-bagger. He's applying the same principles to this business. It's going to generate $7 to $8 billion of free cash flow. They're buying in 15% of the company. It's a cash machine. Margins are going back up. It's a neglected business. This is a winner. It's going a lot higher from here over the next 12 to 24 months, in our opinion.
Thomas, I know it's always a killer interview when I sit there and say I could do this like for at least another hour. Unfortunately, we got to leave it there. It's always great to talk with you. That's Thomas Hayes, chair and managing member over at Great Hill Capital. Thanks a lot for being here.
Thanks for having me, JD.
Folks, the markets are in positive territory, at least seesawing back and forth for the Dow. It's going to be a busy one. That is going to do it for today's coverage and this edition of NYSE TV Live, both from FIA Boca down in Florida as well as the New York Stock Exchange. Thank you as always for taking the time to watch, and we will see you again tomorrow.